Well, hello everyone. Welcome to the Monday, September 29th closing playbook. We are about to get started with a little pre-show content and then we will roll into the good stuff. For those of you who are joining us for the first time, a special welcome to you. Closing Playbook is a daily free webinar that we do where we concentrate on trading in the last 30 minutes of the trading day, and we also try and do some market review as well as some education, answer some questions, go over some trading concepts, and occasionally have some special guests. It is a bit of a fast paced trading session. So if you're new to what we're doing here, don't feel pressured to take all the trades or keep up with us. Just kind of watch for the first few days and kind of get an idea of what we're doing. And also, the trades that we give out during closing playbook are a little bit more speculative than the ones that we do in our premium programs, where they're thoroughly researched and the trading has a back testing and history and known success rates and things like that. What we do here in closing playbook is a little bit more of just reactive to what's going on in the market and so on. So with that, the interface that we're using here, you can do a few things to perhaps improve your experience. The green column on the left is really not important. You can shrink it by clicking on the hamburger button. That's the three horizontal bars at the top left. That will reduce the space for the green column and increase the area for the presentation. In the bottom left corner of the presentation, we have the speaker icon. That is a mute and unmute button. So if you suddenly lose audio, you can double check, make sure you didn't accidentally click or tap on the mute button. In the bottom right corner, we have one or two buttons that can control the size of the presentation. One of them is the double arrow button that will make the presentation full screen. That will give you the best view of what's being shared on the screen, but will temporarily hide the chat and the announcement sections. The button to the left of that, which you may or may not have, is called the picture in a picture button. That will shrink the presentation down into a small window that will float over whatever else you're doing. So if you want to be able to continue watching and listening to the presentation while maybe switching to your brokerage account or something on the same screen, you can try using the picture in a picture button, and that will allow you to keep the presentation rolling. The reason I say you may or may not have that button is because it is both browser and device dependent. So depending upon which browser and device you're using, you may or may not have that function available to you. We recommend trying the Chrome browser for best compatibility with that function, but it will also depend on what device you're on. The far right column is the group chat column. At the bottom is where you type your messages you want to send out, and the big area in the middle there will be where the messages coming into you scroll by. If you'd like to send a private message to any of the hosts, being me, Graham, or Nathan, you can click on any of our messages in the group chat and then click on that double speech bubble icon, and that will open the next tab of the chat column there, and that will give us a private message that only the host that you clicked on will see. We have a replays page that you can go to if you want to see a replay of this session or any prior opening closing playbook sessions, as well as some recent Stonkomania sessions. That's the URL there. We also have a bunch of other helpful URLs down in the announcements section. If you scroll down below the presentation area, and if you're on a mobile device, it's even below the chat. You'll see those helpful links. I'm not going to go through all of them individually, but I will point out that the Telegram channels for both Nathan and Graham are there, as well as the $1 VIP opening playbook membership area. That's really helpful to have. It's only $1 for lifetime membership. Best dollar you ever spent. It'll give you, training, practically free training, online tools, calculators, helpful links, all kinds of good stuff in there for just $1. So check that out. And coming up today, we're going to be doing some gap trading, which Graham's going to be walking us through. And then we had a little bit of technical difficulties on Friday, showing you the presentation for Nathan's Tucci headquarters program. So we're going to give you the last chance at getting into that program for a while today as well. So with that, I see we have Mr. Lindman with us. How you doing, sir?
Hey, doing pretty awesome today. Really, really great day across the board uh, in the stock market. So I'm enjoying it, having a good time. How's everyone else doing here on this lovely Monday?
Let's see. I haven't gotten into the chat myself yet, but it looks like everybody is doing all right. Can you tell me how you pointers to things like email go there? Taylor, I don't really understand your question. If you could maybe rephrase that a little bit, it would help. Um, let's see. Do either of you have an option or opinion on FCX? JD's custom indicator just fired an entry alert. Do you follow FCX, Graham?
I have traded it in the past. I haven't recently. Let me look. Oh, that's one. I'll share my screen here. And I'm going to give you guys a gap scanner here in just a second. So I was just trying to put it all into a doc. FCX here. You can see bad news at some point last week. Definitely could buy it. It's definitely probably overcooked a little bit. For me personally, and we'll talk about this today, actually, this could be a good potential setup for the future. I would look to see it gain some steam and close above this 42, roughly speaking, 42 price point for that gap fill back up. That said, I mean, it could be a great buying opportunity right now. JD's been really, really hot lately on that tool he's been using. But here's why I'm not going to do it. And I don't know all of JD's tactic, but he could be like, if we're looking back here at December of last year, he could be seeing something like this and saying, I'm going to buy it here and sell it here. That could be the move he's going for. For me personally, I look for the full swing, roughly speaking, if I'm going to do something like that. So I'd look to buy it here and sell it up here, which could happen, but I'd more so wait for a little higher conviction entry. I'm okay with being quote unquote late to a trade if it means it's going to have better odds of working out. All right. So today we're going to find some gap trade opportunities, which FCX is a good one to kind of segue into it. I'm going to post a Google Docs link here in the chat because I finally made a gap scanner. Click that link. Oh, thank you, Jason. Awesome. Click that link there. We'll see if you can crash my my Google Doc. This is not for Thinkorswim. I'll try and recreate it for Thinkorswim. I just posted the code in here. This is for Stock Fetcher, which I share an account with Roger. So I've got all of his codes in there too, which is pretty cool. But you can see here, if you go to stockfetcher.com and you can have a free account, you can have a paid account, just go to new filter, paste in that code right here, and then you can fetch stocks, save it, all of that stuff. So that list or that code, that raw code, I just posted in the chat in that Google Doc. I've also posted it in the text format there. All right. So this is my first time actually using it because remember last week we just did this manually one by one. It was a little bit painful, but I told you guys I would do my best to try and recreate this or to create a gap trade scanner for us. So I've done my best here. Hopefully it can work for you guys, and we can probably recreate it for Thinkorswim too. But what this is looking for here is it's looking for a stock that has gapped up more than 5% at least one time over the last 20 trading days. So over the last month, either one, the stock that's gone up 5% overnight, or if you look here, gapped down more than 5% at some point in the last 20 days. All right. So it's going to do either or. It could be an and statement as well, but we just want one or the other. And then again, that's last 20 market or last 20 trading days. And I just did the list in the S&P 500. If you want more, you can just take this little nugget out. It's going to run it across all stocks. I'm just going to stick with the S&P 500. But you can see here what this is doing. For Intel, for example, you can see the gap there. Let's see. Carnival Cruise. The gap was probably this morning. And it's since faded. Tesla, I'm guessing the gap was right here. So you can see it's picking up these opportunities. There's FCX. So it's cool to see that. I didn't get to see who asked that in the chat, but there is FCX right there as a gap fill opportunity. We'll talk about when you would enter here in just a moment to see if first let me see if I can find any good ones.
That was Jason, the same guy who mentioned
Oh, Jason,
helpful new
awesome.
news.
Jason's
Yeah.
always on top of it. Wow, look at EA. They're going private. Oracle, this one's like picture perfect, which I actually like Oracle, so it'll be painful for me to try and take this to the downside if we want to. AVGO also looks like a good setup. I don't want to get too crazy to the downside. You know, I'm pretty bullish on the stock market right now. But let me just keep looking through here. But the scanner should be able to set up an easy way for you to view some of the opportunities right now. Okay, cool. Lulu. Wow. We saw that one last week. And when again, I told you this morning, I'm kind of trying to stay away from discretionary stocks unless they look really, really good. Lulu's obviously discretionary. We have S&PS from last week. So let me just AVGO, Oracle. Maybe I will just let me take this out. I just don't want to get like a bunch of penny stocks in here. See, now we have 1,000 results. Actually, let me just do this. Let me put that back in. I'll just tighten up this gap. Let's see what happens if I do this. I want to see a gap down preferably because that's what I really want to be trading today. All right, let me see what we got here. I probably should pause a moment and let you know what the scanner's looking for. Again, you know that it's looking for a gap, right? Up or down. I just manipulated it myself because I just want to find more kind of like the Freeport setup here. But basically, like we just looked at FCX, we want to see a stock that has overreaction to news, something crazy goes on, and then we want to be buying it when it comes right above this price point here, that gap lower, that high price. If we can get a close above that, we can then trade it for the gap fill opportunity, which we did nicely on Lilly and a couple other stocks. AMD was another good one. And Oracle's like a good setup. We'll look at that one. But again, I just want to try and find some bullish ones so we're not just going short right now. Well, I just loosened up my we did Fortinet. That one I'm not exactly sure what we're at percentage wise there at the moment, but we did S&PS. All right, well, I guess we're going to rock with Lulu, AVGO, and Oracle right now. Oh, Lisa says S&PS is entering a seasonal window as well. So if you guys didn't get that one last week, you might want to go check out the recording from last week, because that the one I think I'm slightly down on S&PS, so you could probably get in for cheaper. Success rate of gap fills, I would say, based on what I've seen, this is just a visual representation, I guess, is 65 to 70% success rate. Jeff, they're honestly like almost 100% success rate if you give them enough time, but that's kind of the asterisk in the statement there. If you give it enough time, I don't have a year to fill the gap. But I'll answer that question in a second. Typically, I want to see it within 3 months or so be able to fill that gap. We have some people saying that their spinning button. I had that too on this page. I just refreshed the page. Actually, you probably can't hear me. If the page isn't loading, actually, let me see if the video. Refresh the page. All right. There we go. Okay, FTNT is down a little bit, so you could get that one as well. Let me go look. Still really like FTNT. I still really like S&PS as well. We took an aggressive one, if I remember, on S&PS. But all right, let's go ahead and look here at Lulu. Again, not dying to trade consumer discretionary right now. Obviously, Lulu is one that got hammered over tariffs and then a weakening economy, fears of a weakening economy. But if we look here on Lulu, which popped up on our scanner, here was the gap down day. You can see here on the 24th, we had a close above this price. So here's the gap day. That would set our entry target here at the high price here, which is 176.18 on Lululemon. We would not want to enter when it touches that. We'd want to enter when it closes above that, which just happened just the other day. We're actually down just a couple pennies from there, so it'll give us a better opportunity here. So Lulu entry was technically on the 24th. We'll still get it here. And for the full target, you would work it up to here, the low price of the day before the gap down. Low price here is 197.67. So right now, that's what, about a $20 move on Lululemon. That's a little over 10% on the stock. Of course, You can go options, you can go stock here, whatever you want to do. I'm going to give you guys a more conservative play, and I'll give you a more aggressive one as well, like we like to do. So let me go ahead and open my trade sheet here and do Lulu gap fill aggressive, and I'll type up Lulu gap fill conservative. Like I told you guys earlier, my goal is to make one day we'll have a slider where you can pick how conservative or aggressive you want your options to be. Kind of like Nate's income machine, but go way more aggressive. I think that'd be pretty cool. All right, Lululemon. Here, I'm going to give it 2 months on this one, and I'm going to see what the price is if we let it fill the gap all the way, which again we said 197. So let me just come right under there. This is going to be my aggressive trade here on Lulu. It's at, oops, I made a mistake there. 5 divided by 150. It's a 233% payout here on Lululemon. It's definitely doable, so it's not like the end of the world crazy aggressive. 21 November. We're going to buy the 190 call, and we're going to sell the 21 November 195 call. Currently, net debit of, I'll call it 150. It's 148. If you want a target at 100%, if you want 100% ROI target, set GTC at $3. I'm personally going to not use a target and let it rock to expiration here. John G, if I remove this from the code, it will work on Stock Fetcher. This is working on Stock Fetcher. Oh, if I remove this from, I don't think that is in my code. Or maybe you're just speaking to someone else.
No, it's the very first part of your code.
Oh. Was that in the code?
That's what you pasted anyway. Maybe it's not in your actual.
Oh, that's weird.
thing.
Yeah, it's not actually in my code. I don't know why it did that there.
So everybody should take it out.
Maybe people have editing rights here. Do they have editing rights?
Yeah,
It says viewer only. Weird. Yeah, I just took it out. So thank you, John. Now I understand. That doc is now updated. Oops. What on earth? It's not even letting me update my own document now. I'm very confused.
AI is taking over.
Yeah, there we go. All right. Now it should be working. Yeah, thank you, John. I did not realize there was that error there. All right. Okay, so there's my aggressive one on Lululemon. Again, if you want to use a target, you can. I'm not going to. But let me go more conservative next. What I'm going to do now is just a wrap order and just say that's going to continue filling the gap here till November. And again, this is still, I mean, this is 2 months out. It's a pretty decent hold time, typically more than what I like. But what I like here is to show you that the wrap orders work really, really great, even when you give them more time. So we hear Lululemon's not the prettiest stock ever. We're just trading it for the technical gap fill setup. Typically, you know, I like a stock that has a good trend, momentum above average, and seasonally strong as well. We know that discretionary is seasonally strong right now, and that's about all it has going for it. But here, for a Lulu wrap order, look, you can give it 2 months to move $1.25, and it pays 100% return on investment. The thing that's kind of crazy to me here is like, if you use this week's expiration, which is way tighter, you need that move to happen in a way shorter horizon. It's actually a little bit more expensive right now than giving it all the way till November. So again, here we can give it more time to make that move, gives us more breathing room, filled right away at 250. And so ideally, Lulu continues to fill that gap, even if it ultimately ends up being a not so great stock at the end of the day. That does not really matter to me that much. We want it to seem more like this. Like here's a gap down. You can see here the first time it closed in that gap range was in May. Look at that. And what did it do? It went and filled that gap. This one didn't actually even fill all the way. It came close, but it ended up higher. So if you did a wrap order here, it would have ended up paying that full profit. Actually, it did end up closing that gap. Look here. on June 3rd. Ended up closing that gap. Ken, is there any way to determine the underlying stock price to reach $3? There is. The problem is that number changes each and every day. So, like, if you were to use tomorrow, Ken, you would be able to use theoretical price to determine the underlying stock price. But if you did it in 2 weeks, because of decay and how the options work, it would be a much different underlying stock price. Kind of a little bit too much to explain here on the closing playbook.
Yeah, I was going to actually talk to you and Nathan about. I know, like the information's available and there are some tools built around that, but I was thinking of because we get that question a lot from people who don't really, can't really kind of figure out where am I looking for the stock to go for me to reach my target on my option. Of maybe building another slider related tool where they could kind of understand as time changes and as underlying price change and as the theoretical price moves and all of that, like how all of that stuff affects everything. And it's never going to be exact and it's always going to change, but they could go in there and kind of figure that out. Might be something we could put together.
Yeah, we definitely should look into that. It would definitely take a lot of thinking of how to pull that off because it is like a curve where as time passes, the numbers change.
Yeah.
But yeah, that'd be awesome. Wow, look at Robinhood today. I am glad I bought a bunch of Robinhood stock a little bit ago. So up 12% today. Holy moly. All right. Enough of that. Let's go ahead and jump into a different one here. I don't love trading to the downside right now, especially on these AI stocks that are really, really hot. But this is a technical setup here on AVGO, which we'll take to the downside. I'm just going to tighten up my target. So we did trade this on AMD, the same pattern here. When did we do it? I believe right here on August 15th, we had our entry with the gap fill down here, and it hit it within like 2-3 days. Worked out great. Same sort of setup here on AVGO. Earnings beat, ran up nice and high, and now we have the gap day. We have that price here, the low price of 331.42, and today we are closing within that range, which means technically speaking, we'd be looking to take that gap fill down here to 308.78. So I'm going to just go a little bit more conservative than that here on AVGO. Just because stocks like to go up. This stock especially likes to go up. Technically speaking, it is an opportunity to the downside. But let me go ahead and pull this one up here. So like here, you can see a gap fill to the upside on AVGO. This would have been a great one to trade. Entry would have come right here on January 31st. And it went and almost filled the gap there. Got pretty close. This is what I was saying earlier that someone asked what the win rate is. So like if you were technically saying to get to this price, it would be a win. It technically lost. Now, if you did the right options, you probably could have made some money. With that said, technically on top of the technically, if you gave it enough time, it ended up winning. But I don't like waiting 6 months for a stock to pay off. Actually, that's only about 4 months there. But I think you guys get my point. So in the near term, you're looking at a 60 to 70% win rate. Long term, it's like 90-something percent, especially with like S&P 500 stocks. But there's an asterisk there because it can take a lot of time. I will look, Jimmy, at Amazon next, but let me go AVGO gap fill here. Let's go 17 of October expiration. Remember, our gap fill price is down here at 308. I'm going to go more conservative. I'm just going to take the highest of these resistance or these support lines, which is 317, roughly speaking. So we don't have a strike at 317. Let's look at 320. This is a really good one. This is kind of a hedge for your portfolio as well. Here, if we do get a market pullback or freak out with government shutdown, anything like that over the coming couple of weeks, AVGO will obviously take a spill if that happens, or maybe technically it just closes the gap like we saw with AMD, which worked out perfectly. It paid out really, really nicely. Either way, let me go ahead and type this up for you guys, and I'll get it posted here in the chat. Really nice payout here. All right, this one on AVGO is trading for a net debit of 93 cents, 95 cents now, which means if this gap does get filled, 250 is our max selling point, and 168% is our profit here. So if AVGO makes a small move lower. Again, we did 120 strike. So that's right here. And we have all of this time for it to happen. It'll pay over 100%. This one I would definitely consider using a 50% target on. Of course, if you have the opening playbook $1 membership, you have that target calculator as well. But you can do that by just taking your entry price. So I just got filled at 93. Take your entry price and multiply it by 1 plus whatever you want your target to be. So I'm going to multiply 0.93 times 1 plus 50% is what I want my target to be. So I would set a closing order at 140. Set it good till canceled. And then if that price hits 140 at any point during the next couple of weeks, I will automatically get that 50% target. Now, the reason I'm doing that is because, like I talked about on opening playbook this morning, we have been getting minor sell-offs, 1, 2, 3%, but they're almost always instantly getting bought right back up. So what I don't want to happen here is, say we get a minor sell-off here in the next 3 days, AVGO gets well below our target or below our strikes, but then the buyer step right back in and he goes right back. We're going to see our ROI go way up and then all the way to zero. So to help avoid that, what we can do right now is use a target here, a very conservative target in my opinion, at 50%, which for me, based on a 93 fill, was a target of 140 GTC limit order, obviously speaking. Now, if you want to, you can do the same sort of thing on Oracle. If you guys want to get even crazier on AVGO, you just tighten up the expiration. And actually, this one's not paying that much more to take a week off. I would just stick with the one we have there. Let's look at this week's. It's not, I would just stick with the one we have. That's why the option slider is going to be great. So I don't have to click through all of those. That is a debit spread. I did the closing order. I just flipped it, Rosalia. I just flipped it to a DDC to a credit for a close. But when I bought it, it was a net debit. Let me read this. Did I mean? Oh, you guys are correct. I see what you're saying. Dave, this morning I said I'm good for one mistake a day. There's my one mistake for you guys. You guys picked up on it because you guys are awesome and smart. We are buying the 332.50. We are selling the 320. I typed in 325. So let me go ahead and delete that from earlier. Good catch. Thank you, guys. So that's probably why you were wondering if it was a credit. Now it makes sense. Alrighty. Does it look correct now to you guys? Should be correct now. Rosalia, I don't have that October 3rd call. Susan, yeah, you are correct. It was, I posted it in backwards, so I apologize. All right. On our scanner, we didn't have anything else, I don't think. Let me.
On the IBIT trade that we did, and that we reiterated this morning, that was the 250% max ROI. You're not setting a target on that one because it's in Bitcoin's kind of in a different situation than these, right?
I don't usually set targets, so that's why I didn't personally set one there. Of course, you're welcome to, and that information is in the opening playbook members area for you to set the target however you want to use it, whatever you feel comfortable with. I personally am going for the full profit. I personally also, maybe I'm biased. I don't know. Maybe, I mean, I've seen the data. I know what the data says, and that gets me really excited. So for me, in my opinion here, I would not be shocked to see IBIT up here in the 80s by the time that thing's expiring, which is going to give us a ton of cushion on the IBIT trade we took. So that's why I'm not using a target, because I fully expect it to be all the way in the money by a mile. Phil, if you bought the other way, you may have to close it and re-enter. Sorry about that. All right.
Mitch, it's like a couple of messages up from yours. The AVGO is corrected a couple of messages up from yours.
Trying to see, like, here's an example of a bearish one that's set up on GEV, and it closed that gap. So very similar to that. Let me go ahead and pull up that scanner again just to double check. I just think we just had those two as new ones. Of course, if you didn't get SNPS last week, or if you didn't get Fortinet last week, those are two very viable ones. We'll definitely have FCX on our radar. Let me look at this. One's not closing the gap yet. We did Lulu. Dollar Tree's no good. ALB already closed that gap. You can see there's the gap. Bam, filled it. TXN is kind of getting close. Needs to close above that 190 range. S&PS, we're active. DRI is getting close, so let's make sure we keep an eye on DRI. Oh, JBL. Let's go look at JBL here before the markets close. This one's been an awesome stock for the most part. Look at that gap. Okay, here we go. Now we're talking. Getting a little resistance here at the 50-day moving average, but gap down, right, on earnings. Next day would have been our entry. So this was Friday. Here's today, pulling back a little bit. So we get a little bit better entry. Love to see it. Let's go ahead and look here. 224 is the gap fill price here on our good friend JBL. We're going bullish here. And I'm going to look at next week's expiration. It gives us plenty of time. And oh, they only have monthlies. All right. And our price was 224. And of course, they only have $10 strikes. Wow, this is going to cost an arm and a leg. All right, this one I would use a target here. I would be looking at the 17th of October expiration. JBL is the ticker. 17th of October, we're going to buy the 220 call. I'm going to sell the 230 call. It's currently trading at a net debit of 255. The max ROI on this one's like 300%. But JBL would have to get above 230 by expiration day. So expiration day is all the way over here. It would have to get above 230, which honestly, it very well may do. So maybe if you take two contracts, put a target on one, let the other run. But what I'm going to do here is I'm going to place my order. It's at 245 right now. I'm just going to set it at 250 and let it sit there. I don't want to rush it using a limit order, of course, like we always do. We'll see if I get filled. If not, I may have to come back tomorrow and try again, as we're already got a minute left here. Only have a minute till the markets close. With that said, I'm going to see if I can try and get filled. Let me do 255. That's what I saw last. Nothing at 255. But what I would do is just take my entry price and multiply it by 2, and that's what I would use as my good till cancel exit order. That would be 100% return on investment if JBL makes a nice little move from here. This is a high-flying stock, very usual for it to make big moves. So I think this is a great opportunity here on the gap fill on JBL. Again, I may have to enter tomorrow. I've got 20 seconds. I'm not going to force a trade here. I'm not going to pay way more than I like for it. But again, if you do get filled on this one, we have until October 17th for it to get to 230 for a max profit. That's where my crosshairs are here. That would be a very typical move for JBL for about a 300% return on investment, depending what you got filled. Diane got filled at 255. My order's still sitting. Bell's ringing. I'll come back tomorrow and try and get this one again. But I really like this one. I don't know why I didn't see it the first time we ran the scanner, but looks really good. Barbara, gap fill. I'll explain it again here. We're just looking for a big move on news. So in this case, JBL had earnings. Overreaction to news to the downside here. We're not buying it just because it gapped. We're not buying or selling just because it gapped. We want to see buyers or sellers stepping in. So here we see the next day, the stock moved higher. It moved above the high of that gap down day, When that happens, we can enter with confidence, knowing that not all the time, but more often than not, we'll see a stock go close this gap to the upside. Hopefully that was a quick, easy explanation for you guys. Let me see if I can find another one here on JBL. I'm sure there is at some point. Here's like a gap fill to the downside. Stock pops. A couple days later, you get that entry price where it comes below that gap up day. And what happens 3 days later, it's already hit that target down here. So that's the essence, the quick gist of the gap fill. I like trading them. They're fun. They're easy. They're really easy to trade, and they tend to work out pretty good overall. Wreck-It Ralph, U.S. Senate Democrats are waiting. Stopgap funding. There you go. It's funny. I always see the government shutdown headlines and people freak out and try and make a big fear headline out of it. It seems like anytime it happens, nothing really ends up happening, and it's just a kind of overreaction. What we're going to do now, for anyone curious, is tomorrow we're going to have tomorrow morning, 10 a.m., we're having a Q4 outlook meeting. You're invited to it. We're going to have some special guests on as well. Nate and I are going to prepare our portfolio, our overall outlook for the stock market over the next 3 months. This is the end of Q3. Tomorrow is. So we want to make sure we're prepared for the final quarter of the year. You definitely want to be there at 10 a.m. Now, just a teaser for you guys. Tomorrow, at the end of it, we're going to talk about Nate's newest overnight options software upgrade. We've all been making software upgrades. They're outstanding. They're phenomenal. They're mind-blowing. The overnight option one is really, really cool. It's going to multiply opportunities 3 to 4 times per day, the opportunity that you're used to getting. But what we're going to do right now before that class tomorrow is play a little presentation about Nate's HQ. That's what he's got going on behind the scenes, all of the projects he's working on. So obviously tomorrow we're going to be talking about the cool upgrades he's made with the overnight option software. But if you want to see a few of the other nuggets that he has going on behind the scenes, you're definitely going to want to stick around and see this presentation. And also, we're going to take you through some market math and hopefully open your eyes to why trading the way we do, we consider to be, just gives you such a strong edge in the market. So stick around, check this out, and we'll be back together at 10 a.m. Eastern tomorrow for the Q4 round.
No, but this is what I was referring to, that today we're tackling this question. And as far as I'm aware, this has never been shared publicly ever until today, this morning. So you are
correct about that. Because we have shared it with our members.
Right. Members only. Yeah. Don't get me wrong.
About a month ago. So it pays to be actually, it was like almost exactly a month ago. So if you're a member, you may have seen this about a month ago, but for everybody open to the public, no, but we do want to show it to you guys. Because we got a lot of cool things happening, a lot of cool things going on. And it really all starts with the mindset you have when you approach trading. So we want to challenge your mindset, whether you're new to trading, whether you've been trading for 10 years or longer. I believe that this is going to open your eyes a good bit going forward on how you really want to tackle the markets. How do you really want to define which strategies you like best? So today, Nate and I are going to tackle what we consider to be the most important question in all of finance. And we really mean that. It's one that can make or break an account. Now, if you've been following Nate for a while now, then you probably know him as either the guy who used an aggressive approach to publicly grow an account from 10 grand to 50 grand, about a 400% return in only 4 months. Or maybe you've heard of him quietly generating over $100,000 in his slow and steady income portfolio last year alone. Now, if you're in this room, that means you're probably in one of our premium services, from which we've been seeing endless stories from the top students each and every week. I mean, we hear from you guys all the time. I love it when we hear it every morning from the overnight options that we know not every trade works out, but more often than not, they're working out. We had Art here, retired Navy vet, said won 5 of 6 trades, made $5,650. Carlos here, up $5,000 with minimal risk. Nate's a great coach, humble human being. Richard here took 5 trades, 5 automatic wins, $4,434. Loves that he can set it and forget it. And you guys know there's dozens more. I mean, we can just show them all day long. You guys are great. You guys are awesome. And I love it, Nate, when we bring in a new idea like we did this morning, and you think you're going to, stump them, and they're all on top of it.
Oh, they caught me on that VIX one.
Smart. You guys are on top of it. You're here every day learning, hopefully earning, but obviously, hopefully having fun. Now, today, Nate is turning up the heat. He's taking things to an all new level, all on a journey to help folks tap into the most effective way to grow an account in all sorts of market conditions. Now, you might find that his solution is surprising, maybe even counterintuitive at first, but when it's all said and done, by the end of this broadcast here, you should have that light bulb moment on the exact steps that you should take to tap into the ultimate way to aim growing your account. So, Nate, why don't you go ahead and walk us through what today's class is all about? Plus the incredible revelations, which you guys just got a little sneak peek, a little teaser.
Some of the revelations. Yeah.
A little something to wet your whistle there, and the developments that you made along the way based on your findings.
Well, thanks for doing this again. And thanks to everyone for being on here. Like I said, we've never done this publicly. And so hopefully this will be a class to remember. My guess is we will only do it one time, as was the case last time. And because for the past few months, we've been working on some incredible stuff, including a new way that I think is kind of the ultimate way to really take advantage of what the stock market is giving us at any exact moment. Thanks to the power of artificial intelligence, some very expensive coding developers, including some more data feeds that we just had to stack on last week and some options optimizations. I really think I've come across the perfect solution for anyone who's serious about trading and investing. Now, this journey actually started right here in opening Playbook because we asked the question, what metrics identify the most powerful trading strategy? I'm sure a lot of you guys were in here. Now, we'll crunch some of the nerdy numbers here, but just to be clear, my goal is that you'll have kind of a eureka moment about how strategies and compounding and growth of your account actually work. Because if I were to ask 100 different traders what the most important stats are for picking the best strategy, I think I would literally get 100 different answers in response. It might be win rate, profit factor, average return, hold time, drawdown, cager, all kinds of different things, you name it. But as we've shown you in these trading sessions, on their own, none of those truly get the job done. I mean, knowing the win rate without any other factors, recipe for disaster. For example, this is one of the examples. You have trader number one with a 95% win rate. Trader number two has a 50% win rate. Who's going to be the better trader? Well, obviously, we have no idea. You need much more information. Now, once you add in the average winner for each and the average loser, now you can start to get a better idea. Drum roll, please. Trader number one with a 95% win rate is actually a big loser, or a small loser, maybe I should say, to be more fair. Meanwhile, trader number two is absolutely killing it with a 50% win rate, which I think, Graham, a lot of people in these sessions have already kind of had that aha moment. Like, oh, wow.
I try to talk about this all the time. People are so focused on win rate, and it means absolutely nothing.
Yeah, so win rate means nothing, and certainly is no way to identify the most effective strategy. But what about profit factor?